Well, welcome back to another Elliott with some cryptos, and we're gonna have a quick look on Bitcoin, as always, of course, and Quant. It's been the one that slightly has won the vote from the Quora Inner Cycle team this time around, with 19% of the votes counted in, 18% of the votes Matic that was, and well, maybe it would have won taking into account how many people started voting in closer to the end, but I'm doing the video now, so I need to count for the current results. So with that said, we're going to go and have a quick look on both. I will try to be quick and simple without complicating things too much. And of course, if you have any questions, feel free to go ahead on YouTube. I always try to find some time to respond to those requests. And let's not forget that none of this is investment advice. It's purely educational. And of course, the primary objective of this video is to help you understand how markets could move and what I'm expecting as well, based on my experience with Elliott waves and the markets. So I wanted to go to the daily on BTC. Last time, as you well know, I'm expecting an ABC, right? Like for a while now. Last time we talked of a potential move down here as 1 2 1 2, right? And then it will get 3 4 and 5. That was due to the fact that we kind of had an overlap here maybe already, or even not, but it was just the fact that this correction over here didn't look like it belonged to the same structure as with that should be here, I think, as with other correction in wave 2. Now this is a guideline, there is no rules, but the guideline of alternation says that if you got one sideways correction in one of the waves, then the other one of the same degree, the other one should not be sideways, should be sharp. So you got a way between depth and shallowness and versus the duration as well. Yeah, this is the reason. But I did also mention, I don't remember exactly which minute, that I was leaning towards the scenario where this is a done case and we have a triangle internally here and the fifth wave finished. Now, after a couple of weeks or so, we see that the one I was leaning mostly towards, it's playing out. And that seems to suggest that we might have a few good months still going, because the idea from this count, of course, and this is now the main scenario, is that we've only started off, we haven't even finished wave 3 yet, by the way, maybe we just did now, started off a 5-wave move to the upside. So we're going to get a deep correction. Typically, this is the 50% where we'll have ABC corrections. And then we're going to get another 5-wave move to the upside. Okay, and since we're again expecting for an ABC, the potential target here, of course, these are going to be changing as we get new data, is the 33K. Okay, now what we could do, we can make an assumption, for example, that the wave 3 is now finished, or we can do something else. We can look at perhaps where the 100% of A and B is going to bring us without having an A in or a B in. But if we made an assumption, hold on, that would be here and that here, so a bit lower probably. So we'll come a little bit lower down. Let me take these two off because I can't see much. That's the 62. That down here, and that would be the 50. Yeah, something like this. So we can imagine the wave A ending around the previous wave 4, which is natural when especially we have corrections to the upside in the first wave A that they are extending so much in the third wave. So it's natural that we expect wave A to end around the peak of wave 4. Then we're going to get a correction 50%, and from the 50% off we go to around the 33k. So if that happened, look, this is my wave 4, the 50% from bottom to top in wave 4 is around the 1986, and that brings us up to around the 33k. That makes pure sense to me for now, though it's very early. I'm just showing you how I'm making premature predictions about where prices could be heading. Now, this is the main scenario, guys. Let us bring that on. This is our base channel, okay, and we currently see a break outside this base channel, okay, which is a very important well, step into, you know, moving higher. Now, we've only just broken, so it would be prone to think that we might return fairly soon. And to be fair with you, if we just go a little bit closer now and we'll look at the internal structure over here, look, this is way overextended. Yeah, this is way overextended, the 200 and the 23k. So to me, that seems to be a case where wave 3 is either done now or is going to be done in the next move to the upside, because maybe we're going to do another one to the upside since Saturday today and Sunday, and we're going to see the sell-off coming Sunday night, usually from Asia, because this is Asia pushing now. Okay, so institutions got in here over the middle of the week, and now Asia is pushing higher, of most probably. This move could even accelerate, guys, and we could have a very short wave 4 here, because the depth of wave 2 it's probably doing the 61.8 here, just by judging by the eye. Hold on, if it lets me push that on, there you go. Yeah, we did like 65-70%, so the correction in a wave 4 supposedly is not going to do more than 30. Okay, that still get us down to double top at 2038 for the fourth, right? But the question is the third one done? I don't think it's done. If we're going to look at the short term internally soon, but before we get there, just look at this. Okay, if this is the break outside this channel, we have another base channel over here. Prices are way above that channel, which means we're in an accelerated trend, guys. Okay, and of course the other thing is to, you know, to look at what the extension is from here to here, but I want to take you in the shorter time frames for this. What I'm actually telling you though is that the 238 to 61 comes very close to the previous wave 4. Okay, so maybe we're gonna, since we stopped at 23k now, we might get another spike to the upside quickly to take out the less, to just liquidate the latest shortest here, and then we're gonna go for wave 4. Wave 4 is not necessary that it's going to get back within this channel. Maybe it's going to come down here and we're going to have an overlap cluster over here between these two channels. And usually this is the case around 2060, and also remain above the 20k, which is a very, very big psychological support. It will mean that bulls are more likely to prevail than not. And then we're going to get the fifth. And then on the way down, again, we don't need to get that back within channel. Okay, so the base channel is, we're probably not going to see prices getting back to the base channel again soon. It will take probably months. Okay, now we might do a false break and all that stuff, but as long as we're above 2050 or so, guys, I don't think that's going to be anytime the case soon. Now, as we go, of course, as time passes, this slope gives us lower prices, so that 2050 is going to change. It's going to be closer to the 19k, 18k, and, you know, other sort of levels. Now, to just quickly show you a few of the variations here, I didn't even go to the short term yet. Okay, let me just go on the 1 day again, and let's just look. This one is okay. This is one of the variations probably in the medium term, and this remains still the case as long as we remain like below the 79%. okay? And the 79% is what we currently actually are flirting with. We did break higher, but we didn't get a close above it. If we get a daily close, it's not going to confirm a breakout because usually it takes 3 days, but in the medium term, but it will mean that I'm going to get this invalidated. This is my process. You should have your own one. And that would mean, of course, we're going to get further downside for wave A. That's not going to be too good of a scenario. Another one we have been looking is for potential wave A being done here. That would be an A, B, and a C as a flat, and then we'll go lower down. It could be an extended variation or a running flat variation, which means we're gonna get a lot of downside from there once that finishes with a 25k or so. Another idea is to look at this as an open diagonal, and that would be on an ABC structure, and that remains still valid as long as we are below 2520, I would say. We also have a double zigzag, okay, which is W, X, and Y, very similar with the other scenario where we're looking for a wave B flat. Here is just wave X. We also have the double zigzag, which is the most bullish case, okay, which means that our wave, well, our primary wave is done here. We're finished, and that is going to give us a fresh high, and we're going to go for all-time highs. I don't think this is the case. If you ask me right now, even I know this is a good move to the upside, but I'm not convinced that's going to be the one. We have a lot to deal with in the economics sort of side of things. And then this one was like a triangle thing that I looked at before. We looked at actually a while ago, and you know, I will tell you I'm 50-50 between this and the main scenario I have, because I like the triangle scenario here more than having to deal with all these guidelines of the alternation that they don't really get respected. This one is okay because we just simply get a triangle in the triangle, and that actually gives us the chance to have this as a 5 wavelet to the downside over here, which is much better. What I don't quite like is that we don't see an actual decent correction over here for wave 2, because that would be something like 1, 2, 3, 4, and 5, right? But it will be the same case in the other scenario, so choose. Now, in the short term, the variation, that's the one too. Okay, we saw that. Then we go in the short term. Here's the thing, guys. Let me show you. Let's take it from down here. Well, we've got wave 1 and 2, and then we are still waiting for wave 3. Internally, we have minor wave 1 and 2 and 3 and 4 and then 5. We are looking for a W, X, and Y here, and for a flat here. These are considered to be both sideways corrections, and I know the alternation is not respected, but it's just a guideline, so we'll have to go with what the price is showing us. We remain bullish as long as we're outside this channel, guys, okay? And that means we're bullish even if we go down for 3k now, if we have a fall. I've seen a lot of people calling this an ABC like this as a flat, running flat. It's wrong. Why, you might ask? Well, because if we respect the guidelines, wave A lasts 3 hours, let's say, wave B lasts 10 hours, wave 4 lasts something less, in my opinion, and because it makes a bit more sense on that end as well, rather than just have a huge wave B going up. This is a flat with a running flat internally in wave A, and you might ask, well, and this is the main reasons that 1/7 is wrong, because you have a very clear 5 waves coming down here, okay? And if you have 5 waves coming down here, then that means that there is a wave C involved, okay? And if there is a wave V seen involved going down, we cannot have W, X, and Y because it's not a double zigzag. Okay, you cannot have a double 3. Well, I mean, it would be a double 3 as well, you know, but mainly this is a flat. Running flat, you've got the wave C to take into account here, the B and the C. And then here's where we are now. Look, this is 1 and 2. And then you have 1 and 2 again. And then probably you got the 3 and the 4. Although the 4 is very, very, very short and shallow versus this wave 2 as well. So that means this is probably 4 and then maybe we'll consolidate here, maybe we'll just go straight up or whatever, but it looks like we might have in the very short term one more wave to the upside to go. Let me label it for you. 1 and 2 and 3 and 4 and 5. Let me place this over here as well. And of course, I believe that because not much else makes sense unless if this is 1, 2, and this is 3 and 4, and this is 5, and we'll have a leading diagonal instead. And why we could have also a leading diagonal here? It's because leading diagonals is used to provide very explosive moves to the upside in the third wave. Okay, so between the two, we either turn up here or we're not. But I'm mainly focusing also, even if we have a leading diagonal here, that we did only 38%, right, in the correction, which means that we need to see at least a dip here for the fourth wave, because otherwise the correction we got in fourth was like 20%. It doesn't really make sense. I mean, okay, it's an accelerated trend, you might say, so the two corrections could be, you know, what is driving this price action higher without getting dips, which is true. But I think we have one more wave to the upside to do here. Okay, guys. And that's for BTC. Now for Quant. And let me check, where is this? There. Let me go out on the daily and remind you of my expectation. This is the actually alternative. I was working on it just now. I'm not going to go back and try to talk about data and all that stuff, but if you check the data available online, CoinMarketCap, for example, you will realize that this is not done yet. It's fifth wave. Okay, and we have talked about this in the previous video that we did for Quant maybe a couple of months ago, that it looks like a case where we have either finished wave 4 or we're still in wave 4. Okay, and in my opinion, my main scenario says that we're still in wave 4. You might ask why. I will explain why. We have an ABC here, which means, you know, we could be done and we're going to go higher, perfect. But the problem is that we also have an ABC going up. Okay, and I will show you what is the alternative and what this ABC means. But because we do have an ABC going up, and because we have not really managed to break higher and above this channel as well, although we had an attempt at above 61.8, we failed. This tells me that probably this is going to get another leg to the downside. I will tell you what I like about this and what I don't. Actually, I think I can make that change already as I see it now, because it looks like there will be a bit more downside here. I think I would prefer something like this. Yeah. So instead of having A here, we expect 5 waves coming in. That's that would be minute. That's fine. We need to change this to a lower degree. There we go. Oops. Excusez-moi. That's the expectation. So there's nothing to dislike to the downside now, because I wasn't liking how short wave A is, and then you will need a very, very, very extended wave C. You can get them anyway, because we are our terminal waves, and then we expect to reverse. But anyway, for now, the idea, guys, is that this is going to continue to go lower down in the medium term. But if we look a little bit closer, we are flirting with a 50. Maybe we're going to get a breakout. We could still do 62. We can still do actually 79, because usually wave 2 is the one that is the deepest, and we do get around the 70% correction. Actually, anywhere between 61 and 85 typically. But the 61 is also one of the cases. The other thing we can do is use a Fibonacci extension here and see where the 100% gets us. and this is where we currently are. That's why we face this stiff resistance at the 50%. And let's not forget, 50% is where sentiment changes, even in this short-term trend. So I think 150 is a very important level, and breaking above 150 could even invalidate this scenario. And I will tell you what the other scenario would be, but still a bit not the scenario I would prefer. So it looks like to me that if 150, 160 holds, we're due further moves to the downside. Okay, but we have no signals on the indicators I'm using, at least. Maybe you got on the ones you use. Not on the daily, but we're talking about medium-term stuff. Let's look at the 4-hour. The 4-hour shows divergence. Okay, so perhaps this is the end of this move to the upside, especially since we're flirting also with the channel. So you've got the 100% Fibonacci, you've got the channel top, and you've got the 50 Fibonacci of the downside leg, all to deal with, and a divergence, right? So falling from here is going to give us at least 62. And we are at 142 now, at least, right? That will be wave A, and then we get the B, and then we get the C. The idea is we have to go below the previous low in order to get the fresh low and then continue to the upside. But if we break higher, there is two things that come in. First of all, we could still see this turning into being an X wave, okay? If we get to 79, because 79 is the typical depth for wave X. If we go up to 90, we will change it immediately to a flattening wave 4. If we go above the 100 and up to 105, we're gonna have to change it to an expanded variation. But if we go up to above 127, then we say, okay, we're going up for the 5th. Unfortunately, it's how confirmation and validation works for the waves, but we don't care about mainly what is the pattern in this wave 4, because it could take like 2 years to complete. We mainly care about trading the actual waves internally, okay? And this is where early waves can be helpful. For now, that looks impulsive to the downside, guys, and that looks corrective to the upside, which means we are indeed due, most likely, a move to the downside. Even if we were to assume that we're going to see the alternative coming through, okay, which my alternative, by the way, because we are moving up in an ABC, is that this is the first wave of an ending diagonal, the least bullish case, or a leading diagonal, the most bullish case for the 5 wave. Even in that case, it seems more logical to me that we do a deeper correction. Oops, excuse me. I don't know why that disappeared, but anyway, because when we get ending diagonals, we do see corrections taking us down to around the 79%. Again, this is a wave 2, let's not forget that. So coming down to 50 doesn't necessarily mean that we're not, you know, we have to go lower down. It's deep. It's not considered to be. It's a good pullback. But the issue is that I don't see how we're gonna start this up. I see an ABC here. I see an ABC here. This looks like it wants to do an impulse, but if this is an impulse, then you have to assume these sort of corrective looking move to the upside, because it looks corrective, although it doesn't overlap here and here. It's a wave 3, which is not so typical. So yeah, why does this disappear? Let's just do that. Okay. So the most like sort of short-term, medium-term bullish case would be that this is a wave ABC, and this is 1, and this is 2. Yeah. And we're gonna see then 3, 4, and 5. But even in this case, we need to ensure we remain above 125, because what I'm telling you is that my wave 2 could have finished here. Then that means this is 1, and we'll have an ABC as a flat for 2. And this is 1, 2, and 3, and 4, and 5 for 3. Then we're going to get 4. We'll have to stay above 125, and then the other wave up. And then from there, that will probably be A, and then we get B, and then we get C for 3. Then back down to overlap with wave 1, and then back up to do the fresh high and complete the 5th wave of this probably first cycle that would be for quant. Okay, So that's going to be all. I hope you enjoyed. Leave your questions. I'm sorry it took a while again, but maybe I'm not, because I like to explain things and I want to ensure that you guys understand the thought process and the analysis as well. Not just let's see what this guy says and see whether it's going to come true or not. It's not important. It's more important that you know how I do it, so that you can do it